rupee fell to an all-time low against the US dollar earlier this week, despite witnessing a rise after the RBI hiked its rates on 4th of May. The rupee slipped past the previous record low of 76.98 that we saw back in March and slipped as much as 51 paise in a single day to touch 77.4 levels. It has depreciated nearly 1% in May till date. So what led to such a sharp fall in one of the best performing Asian currencies? Let's find out. Economists say easy monetary policies by Asian countries such as Japan and China have led to their inability to keep pace with rising Fed rates and global economic volatility. This has affected the values of currencies and is bound to affect the Indian rupee as well. Even though there may not be an absolute correlation among Asian currencies, but if the Chinese currency is deteriorating, other Asian currencies may not react positively as per experts. Chinese currency has depreciated much in the last few days as People's Bank of China used the easy monetary policy system. But now the impact of poor performing Asian currencies is gradually visible on the rupee too. In the recent past, currencies like Chinese yuan or Japan's yen have fallen drastically. Foreign exchange valuation works on monetary policy convergence or divergence. Whenever the divergence happens, that currency gets badly hit. Forex traders and economists said that the rising price of the US dollar will also continue to affect the global market, and every country is likely to be impacted. Remember, dollar index is gaining not only because of an aggressive Fed, but also because of weak risk sentiment amid the ongoing geopolitical tensions stemming from Russia-Ukraine crisis and tighter lockdowns in China. Global events like these support demand for the safe haven dollar and lead to weakness in riskier assets like the rupee. Moreover, failed RBI interventions in the currency markets have also led to a sharp fall in the Indian unit. 8 months after hitting a record high of $642.45 billion in September 21, India's forex reserves have now fallen below $600 billion mark amid capital outflow and strengthening dollar. When the rupee is weak, RBI sells dollars to help recover the value, and according to experts, RBI has been selling dollars quite aggressively since March when oil started going up. Economists pointed out that due to RBI intervention, the rupee has managed to remain stable so far despite other Asian currencies falling drastically against the growing value of dollars. But with several financial challenges affecting the global economy, India couldn't escape the heat despite RBI's efforts. With the rupee falling drastically in a day, forex experts believe that RBI may now opt for a way to ensure the pace of depreciation and intervene around the 78 mark to curb excessive fall in the Indian currency. Forex experts also say that hardening crude oil prices are rolling the sentiment as the European Union is moving ahead to impose an embargo on Russian oil. This is leading to worries about the widening current account deficit and exacerbating the pressure on the domestic currency, as it will have direct impact on our fiscal deficit numbers. So what lies ahead? What could be the future threats and implications of a weaker local currency on the economy? Pointing to the fact that rupee has been one of the best performing currencies for the last 1 year, experts say that more than the immediate impact, the INR depreciation is likely to support exports over a period of time. Moreover, the balance of payments is expected to be negative in FY23, which will reduce the liquidity overhang in the banking system.